Hello and welcome. The Union Budget 2021 has been not very surprising for one reason, being that there is no taxes that people were expecting and haven't come, particularly in direct tax. Now, there were a lot of expectations that because of the wealth creation that we'd seen, particularly with billionaires and some investors, that there would be some form of tax. That was one. Secondly, we are coming on the heels of a very, very bad economic shock, which is the COVID-19, and there was an expectation that in order to balance the budget in some way, because of the expenditure that would definitely come, there would be counterbalancing increases in taxes. Now, that has not happened, and that's the surprise or not the surprise, depending on how you want to look at it. But there have been several other pronouncements in the union budget around indirect tax, and that's something that's worth looking at a little closely, as well as direct tax, particularly on the personal front, where there are a few small announcements, which is the proverbial fine print, which you usually find out about either in the evening of a day like this or much later. So let's try and get to them with our guests. Anita Rastogi, partner at PwC, and she focuses on indirect tax, and Akhil Chandna, partner at Thornton, and his focus is on personal tax. Thank you both for joining me. So I'm going to ask each of you to speak for a few minutes, just to sum up what you see as the key developments on the tax front from your vantage point, and then we'll try and pick up some questions as we go along. So Anita, why don't you go first?
Thank you so much. So good afternoon, everybody. I think this year budget has really been focused upon tax collections from an indirect tax standpoint. And if you look at the announcements from GST standpoint, the FM has clearly said that technology is the thing to go. We will look at technology. We will look at artificial intelligence to ensure that there is an augmentation of the revenue. And in fact, January collections have been very high already. So that's a specific task of looking at the tax evaders will continue. And there are multiple changes which have already been announced in the finance bill, which kind of reflect to that. And one of them really is trying to control the fake invoices and the bogus invoice challenges, which is a menace today. So what they have done is they have said that if I am a seller of goods and you are buying some goods from me, you are actually eligible to take the input tax credit of that through the invoice and various other formalities. But what they have now categorically mentioned is that I need to communicate to you that I have filed my return, I've shown those transactions on the GSTN portal through GSTR1, so on and so forth. So which means that there has to be a clear communication by the supplier to the purchaser. Only then the purchaser is eligible to take the input tax credit. So there's some kind of a tightening of the credit rules which has been brought in. A similar concept they've also brought under customs, because IGST, the tax which I pay when I import goods, and the GST part of it, which is IGST, I can take the input tax credit. There also they have categorically mentioned that, if there is any connivance or a fraud which is seen when you as an exporter of goods pays duty and utilizes the input tax credit, then in that case, even you will be penalized for it. So in sum, essentially they're saying that whether it is the supplier or the purchaser, both of them have to be very mindful of the genuine transaction, hence to avoid these bogus and the fake invoices. So this is point number one on GST. The second is on customs. Clearly the focus is twofold. One is to increase and incentivize the domestic manufacturing, meaning thereby that all the raw materials or inputs which are required to manufacture goods in India or to provide value addition in India, there has been a reduction of customs duty. Also, the government wants that we need to increase our exports, and hence there are a lot of measures which have been brought in over there as well. So Atmanirbhar Bharat is again one vision which is being implemented through this budget as well. Other than that, there are certain ease of doing business concepts they are bringing under customs, specifically like digitization. So just like GST is a completely digitized world, customs also, they're kind of bringing a common portal where through which you can take a registration, pay the customs duty, file bill of entry. You can also be issued summons through that particular portal, so on and so forth. So they're moving ahead, moving away from a paper economy to a paperless economy. As we know that this time's budget was the first budget which was given through a tablet, So from that perspective, a lot of initiatives and a lot of steps which have been taken by the government.
Right. Okay. And I'm going to come to customs duties in a bit, because that affects some of us, particularly if I'm a buyer of gold, which many of us are. Akhil, let me ask you to kick off your key takeaways from the budget.
Yeah, so I think let's see what government has come out this year very differently. Amid a lot of expectations, contrary to the popular expectations, like there's no change in the slab rates, tax rates, limits applicable for various deductions, which individuals were expecting. And then government has not given any key updates on that. However, the focus was, as always we've seen, with an objective to achieve housing by 2022. The government has come out with a lot of proposals, especially to extend, exemption available for the purchase of affordable house for the first-time home buyers, which is additional 1.5 lakhs, and that has been extended by another 1 year, and the property up to the value of the property should be 45 lakhs. And there's another new concept of rental housing projects by another 1 year is a welcome move, I can say that. Another move, which will give a lot of boost to the real estate sector and impetus to the economy as a whole, is the relaxation by way of increasing the safe harbor limit, which was 10% on the purchase of a residential house, up to 2 crore. Up till now, it has been extended to 20%. So that's another move, which is positive and perceived to be giving a lot of boost to the real sector. On the compliance, the government, as on IDD side also, there was a lot of discussion on the compliance side. So on the compliance front, introducing faceless dispute resolution mechanism for small taxpayers to close long pending litigation is a step forward towards simplifying the tax administration, I can say that. And there are many other changes. They've reduced the big change, which will impact many people now, to revise the tax return and to file the belated tax return. They've reduced the time limit by 3 months. Earlier, it used to be the due date used to be 31st March 2020, or 31st March of the year, but now it's been reduced to 31st December. So that's people have to take a note of that. And from I think these are the popular changes, and one big thing which will impact a lot of people, on a higher income bracket, is that the taxability on the ULIPs and interest on employees' contribution above 2.5 lakhs. We will discuss this more in detail, while we move forward.
Right. Okay. So the key thing you're saying is that, because there have been some rumors to the contrary, that there are no tax changes at all. I mean, I will not in any way pay more tax this year as compared to last year. That's very clear, right?
Yeah. So there's no change in the tax rate. There's no change in the surcharge. There's no change in the cess. Lot of people were thinking that government will come out with Corona cess because of this COVID pandemic and all, but nothing of that sort. So it's a big relief for the individual taxpayer.
Right. Yeah. So there is another agriculture cess, but that's not on. That's not an income tax. It's on. It's an indirect tax. Okay. So let me come back to Anita. Anita. So there are a bunch of smaller taxes that have been announced, including, of course, on imports of gold, on. The customs duties on gold have been reduced, whereas there has been a customs duty levied on petrol and diesel, and there is new agriculture cess. So what is all of this adding up to, is really my question.
So broadly, if you see, there are some tweaks they have done, but essentially they have also categorically mentioned that if I am levying this agricultural cess and infrastructure cess, the objective is to ensure that money goes to these respective areas of development of agriculture and infrastructure. Having said that, they've also categorically mentioned that the BCD of it is going to get reduced so that the final rate which is levied on an importer is not going to change. So essentially, even though these cesses are being levied, the corresponding basic customs duty is getting reduced. So the overall impact is nil. The effect of this really is that this amount of money will go to the center for using it only for the specific purposes. Otherwise, if it's a BCD alone, that is actually divided between center and the states.
Okay, so it's really a book entry, but as far as the government is concerned, and does not affect me directly. Okay,
Yes.
one of the other things, I mean, you did talk about the Atmanirbhar approach and how we've seen several tariffs rising elsewhere. Now, the finance minister did talk about reviewing these 400 exemptions for customs duty, and she's also talked about reducing duties on certain inputs. Now, again, I mean, many of these are linked to things like polyester, and I'm assuming that means clothing and so on. So, what could happen finally?
Yeah, so essentially what happens is that there are 3, 4 sectors which they are wanting to incentivize as an export from India. So when you're going to incentivize a certain sector, especially textile, leather, handicrafts, all of these, they are wanting to say that let's reduce the customs duty on the inputs. Let's have more value addition in India and thereafter export those goods to the foreign countries. This is not only going to increase my export turnover in the global market, but also I'll be
Right.
more competitive. That is the objective over here.
Okay, let's take some questions that are coming in. Akhil, and let me bring the first one to you. You already, there's one on, is there a change in surcharge rates on income over 50 lakh rupees? You've already answered that, saying that there are no surcharges whatsoever. The second question is, has
No,
the,
I said there is no change in the surcharge. It's same as it was in the last year.
right,
So
the
there is no
surcharge, yeah,
change.
so whatever was there
Surcharge
continues,
rate,
so there is nothing new. The
yeah.
second question is, because the government did mention something in this space, has the government exempted people over 75 years from paying tax?
No, they've not exempted people over 75 years in paying tax, but they've exempted people above 75 years to not file their tax returns now. But there are certain other things which these people need to comply with. To give you a perspective, they should have income only from pension income or income from saving bank account interest, and they have to file some forms which will be prescribed by the government with the specified banks, so that bank will do the necessary withholding, and there is no need to file the tax returns.
Right. So you're saying that you can't have
But
multiple accounts, and obviously you can't have any income apart from these two aspects, which is pension and
yeah,
interest.
yeah. And so the government intent is to give them a relaxation of filing the tax return every year, but by putting this process in place, I don't know whether it will ease or burden it more. So we have to see how the things
Okay.
gonna progress.
Right. So if you're 75 years old and you want to go off filing income tax returns, do read the fine print very carefully. Okay. Two other areas, Akhil. One is Provident Fund. Now, a lot of people were parking large amounts of money with the Provident Fund account, obviously to benefit from higher interest rates. Now, that has been disincentivized in this budget.
Yeah. So I think on the Provident Fund side, so as you rightly said, a lot of people have huge amount of contribution going into the Provident Fund only because of the tax-free interest coming in their way. But now the government has come out with a proposal that above 2.5 lakhs employee part of contribution, whatever interest they earn on that contribution will be fully taxable. So that people have to be very cautious about this fact that if they're contributing 5 lakhs in a year, though it's out of their own pocket, it's employee part of contribution. On 2.5 lakhs, they have to pay whatever
Right.
interest they will get. It's taxable now.
Right. And tell us about ULIPs, the unit linked insurance plan. I mean, there's a change there too.
Yeah. So I think it's a big change, and it will impact both investors and the companies who facilitate this kind of investment. So till now, whatever premium without any limit, monetary limit you pay towards your live on maturity of that, it's tax free. However, effective 1st February 2021, if your premium amounts exceed 2.5 lakhs, so you're not eligible for that tax exemption, and this ULIP will be treated as a capital asset, and it will be taxable as a long-term capital gain.
Right. Here's a question which I don't know whether either of you want to pick up, but let me try with you, Anita, first. Nikhil Gupta from MP asks, how will asset reconstruction companies help in dealing with bad loans?
I think I'd like to pass it on to him.
Okay, Akhil, do you want to take a shot at that?
I think I don't know much in detail
Okay, fair
about
enough.
this. We need to look into the fine prints more.
Understand. Here's another question on will the faceless income tax tribunal help with cases older than 3 years? Akhil, do you want to try that?
Yeah, I think because they've not specified any limits, I believe they will, but need to look into it, and then only we can have surety. But I don't see any limit, on that.
Okay. Anita, your sense on the overall tax administration? I mean, that's one concern always, and particularly I'm sure smaller businesses who might be watching this. You did talk about how things would be streamlined in terms of GST input tax credit. That's for obviously ensuring that there is no fraud and so on. But actual using, I mean, will things become simpler? Do you see anything in these budget pronouncements which will make life easier?
Yeah, so I think there are a couple of initiatives they have taken under the customs which bring ease of doing business. And specifically, this is regarding, if there is an amendment to the bill of entry which has to be done, it can now be done through the automated portal. Otherwise, it was a big challenge. You had to go to the tax officer, he would agree, disagree, so on and so forth. And this happens very, very often. And the other thing is this entire customs portal thing is so good, I would say. I mean, I hope that they execute it well. Because then one doesn't really need to go to the jurisdictional officer of the customs for various things which is required to be done. So from that perspective, I think ease of business is a good thing. The focus is clearly on tax administration. Largely here, so they have not really tweaked much on the rates other than the concept of doing more manufacturing in India, domestic manufacturing to increasing the exports. Other than that, they have not really tweaked much over here. So I think overall, it's fine. It should be okay.
Okay. Let's hope it is. Yes, go ahead, Akhil.
The earlier question which you asked was on the faceless reopening of assessment, I believe.
Yeah.
Because the tribunal is also, there's an amendment in appellate tribunal also do a lot of assessment. Now going forward will do faceless. But on reopening of assessment, yes, they've reduced the limit from 6 years to 3 years. And there's certain exceptions to it where they have to take a principal commission approvals if they want to open this in 10 years period. But yeah, it has been reduced from 6 years to 3 years for reopening of any assessment.
Okay. Another thing that sounded interesting to me, Akhil, was this pre-filled tax forms. Tell us about how that will work. And I mean, is there a chance that something could go wrong the way the tax department pre-fills it and gives it to you versus what you might think is your income?
So I think this is there right now. Also, there's an option to get a pre-filled when you go to file your returns on the portal, and that's worked pretty well. So I don't see any challenges in that, and now they want to extend it by including other areas also, income received from other sources as well, and looks very promising. And as we are seeing this, the theme is to simplify, rationalize, make it more digital, have artificial intelligence do most of the role. So looks like the way we are progressing, everything will be done in this way only, whether it's an ITR 3, ITR 4 going forward.
Right. So
maybe I will just add a point of view, Govind, and I think this is coming in income tax largely being followed through GST, because under GST already a lot of these returns are auto-populated now. Because government really has all the data, right? Whether it is your supplies or it is a procurement, and then it's a final return which has to be filed. So a lot of things are getting auto-populated now. I think the same theme is continuing in income tax as well.
Okay. Anita, you talked about the fact that there is some ease of doing business now and all of that. So let me, as we come to the last few questions in this conversation, I mean, ask you about what else could be done. I mean, so some things obviously get announced in the budget and will get executed in coming days. But what else could be done which in some ways picks up from what's been announced today or what's been pending from previous budgets?
No, I personally believe there is one thing which should have been done this year, which has not been done, is that they should have brought in amnesty scheme for customs as well. Just like they had brought in amnesty scheme for service tax and excise, which went off very well, both from the assessee standpoint as well as from the tax department perspective. We also know that income tax authorities have also brought in this Sabka Vishwas and all that, right? Again, it's some amnesty scheme. Even if in customs they do it, clearly what will happen is the entire list of litigation, the huge amount of litigation which we have, will definitely get truncated. Second is it will actually reduce the burden from the tax department to do all that assessment and those departmental orders, etc., to be filed. And also, I think the government is going to get immediate money, the revenue which they anyways need in the time of our today.
Right.
I think that was really wanting, and they should have done it. I don't know why they have not done it, because it's actually a win-win for both, for the taxpayer as well as for the government.
Right.
That
Okay.
I think was a clear wanting in my mind.
Okay, and maybe they will, maybe in coming days. So, Akhil, here's another question for you, and then I'll come to your closing remarks. The question is, what is your recommendation? Should I, as a taxpayer, go with the older tax regime or the new one set out last year?
I think it depends. It depends because if you opt for a new regime, then there's a lot of exemptions and deductions which you have to forego, and you need to analyze before opting for a scheme, because the standard deduction in that case is not available. There are other exemptions, and which will not be available if you go for the new regime. So if you're not investing anywhere, if you don't have any any other housing or something for that matter, so I think it's better to go for the new regime where you will get a beneficial tax rate and some saving, but it totally depends upon how your investment patterns works and how many deduction and exemptions you have. Otherwise, you have to forego everything.
Okay, and Akhil, your unfinished agenda?
Yeah, so we've seen many changes on tax administration, simplify the assessments, faceless assessments, but nothing much. There's a lot of expectations on widening the tax slab rates and reducing the tax rates, and there's a lot of deductions which people are expecting, because that's ATC, which is the most popular investment linked deduction, which was last revised in 2014. People were expecting that government will come out something so that people can infuse money, and the government will get that money by way of investments by the people, and it will boost the economy as a whole. So that's a miss, I can say. And another thing which people were expecting, that they will increase the standard deduction, which is 50,000 right now. Hardly any relief available to the people. So there's a miss, and overall I think it's if you ask me, it's a bold budget, with a path of economy expansion being chosen over short-term benefits by the government. But with no changes in the tax rates, the government has at least given assurance that they are not asking more money from the taxpayers, and giving assurance to the global market that we are stable, and our reforms are from a certainty perspective, where people can trust, and rely upon.
Right, and yes, absolutely. I think taxpayers would still want more relief, particularly individual taxpayers. After all, they are looking to, particularly those who've been affected by the COVID-19 pandemic, would surely look for more disposable income, and that will help the economy as well. But that's something that I guess we'll have to wait. But overall, as both of you have said, it's a positive budget with a few unfinished points of agenda which can surely be picked up later. Anita and Akhil, thank you both for joining me from Delhi on this Dial-In show. Thank you so much.
Thanks.